Credit cards, credit cards, credit cards. They're great up to a point, and then they're terrible when the interest is high and you got to pay them back. Right? If you're watching this video, you understand. Well, this video is going to be all about how we use reverse mortgages to help you pay off those high interest credit cards. And we're going to go through a couple of examples of folks that I've recently helped who had that issue, that problem. And we're going to go deep into what their problem was, how the reverse mortgage helped them, and kind of the mechanics behind it. So if that's you, if you've got some debt to pay off, and maybe if it's not credit cards, if it's other high interest loans, then stick around. This will be a pretty quick video, but I think it'll enlighten you a little bit. So let's see if I can get to this PowerPoint without screwing it up too terribly. There you go. What you will learn today. Okay. So credit cards, again, look at that interest rate on there, 23.85%. It's pretty high there. What we're going to learn today is how you can use your home equity to eliminate your high interest debt like credit cards. So not just credit cards, but most of the folks who come to me with high interest debt, it is credit cards. So look at this, Wallet Hub. I'm just going to prove this to you real quick. As of May 2024, which was a few months ago, there was $1.27 trillion in credit card debt. It's just credit card debt has skyrocketed, and a lot has it's due to inflation, the cost of everything going up. Money isn't free like it was in the COVID days. Stuff's a lot more expensive. Gasoline, eggs, milk, Jesus, everything. In Florida, homeowners insurance. In California, you can't even get homeowners insurance. So you get the point. Stuff is more expensive. And look at this, 22.76. Now I'm going to show you a few different websites that look at an average credit card interest rate, and they're all going to differ a little bit because they're all from different sources. But you'll see it is absolutely not pretty. And if you're drowning in it, and if you're on fixed income, or you expect to be on fixed income, it's impossible to afford your homeowners fees, like your mortgage, your property taxes, your homeowners insurance, and your grocery bill, and putting gas in the car, and then these overwhelming credit card debts. Right? Does that make sense? I think it does. It does to my clients anyway. So we're going to learn how a reverse mortgage allows you to pay all this high interest debt off safely. And here's the details that we're going to go over. Again, who can qualify? Examples, I already told you. We'll go over just 2 of my clients. I could do more, but I don't want to keep you on this video all day. And then the 3 different types of reverse mortgages that can be used, and kind of what to look out for. And I don't think a PowerPoint is going, or this presentation is going to take the place of a good discussion with myself or another reverse mortgage expert. But we will go in on a very high level. Like we'll explain what you should look out for, what type of reverse mortgage is better for what situation, and then get on a call with me. My contact information is flashing below. By the way, my name is Jason Eichmiller, and I own and run Key Home Lending. We can have a deep conversation about your needs, what's going on, and then we'll figure it out for you. And of course, yes, I will show you how you still pass the home to your kids, even though this is a reverse mortgage. If you've seen these videos before, I'm not going to spend a lot of time on this, because with a reverse mortgage, the house goes to your kids. But some people who aren't familiar are kind of confused or don't understand. So we'll touch on that very, very briefly later on in the video. Okay. Who am I and how am I well qualified to explain this stuff to you? My name is Jason Eichmiller. I own and run Reverse Mortgage Reality and Key Home Lending and this channel. This is my family. That's Alyssa, Jason, and Molly, my 3 kids, and Bridget, my far better half. As I've told my clients, I'm good at 2 things. Number 1 is, or I guess I'm an expert at 2 things. Number 1 is chasing my kids around the backyard. I'm quite good at that. Number 2 is reverse mortgages. So either of those 2 things I'm an absolute expert at, but you're not watching this video on tips on how to kick a soccer ball in the backyard and avoid breaking windows. You're watching this to figure out how you can use your home equity to get rid of some of that super high interest debt that you have. And I'll do my best to help. This is the website, reversequotes.com. So ways to reach me real quick. You can call me at 888-309-9705. That's the quickest way. You can just get me on the line. I had a guy, Mike, just called me about 10 minutes ago before this presentation. You could email me, jason@keyhomelending.com. He could have as well, but that would have taken some time, and then I would have gotten back to him and we would have scheduled an appointment, or you can just pick up the phone and call. If you don't have time, obviously you can email me, or you can just go to reversequotes.com, and on the right of the screen, or if you're on your mobile device, on the bottom of the screen, you'll see a place to put in all of your information. Then if you scroll even farther down from there, you'll see a bunch of testimonials, videos that I've done with my clients, and letters that I've gotten from them, and so on and so forth. This is a new one, actually. Lane sent me this. We closed his reverse mortgage a couple of weeks ago. He was very skeptical about reverses when he called me, but he needed a little of assistance. So he took the leap of faith and trusted a voice on the phone. And I told him in the first call that I will do everything I can to prove myself to you, Lane, and to make sure that you're in an awesome position when you close. And he is. And I'm so grateful that he trusted me to help him. And the other one, the right of that, that's Henry. Helped Henry a while back. He's a great guy as well. You can just push pause on these and read them if you'd like. But we'll go on with the show, because again, you probably don't have a lot of time to waste on reading testimonials right now. And again, if so, just press pause. So before we go into how we're going to use a reverse mortgage specifically to get rid of debt, let's 10,000 foot it. Let's go over what a reverse mortgage exactly is. So really, hate to disappoint you, but a reverse mortgage is just a mortgage. It's going to give you some cash based on your age, your home value, and whatever the prevailing interest rate is at the time. And it's going to give you this cash, and it's not going to require you to make any monthly payments on the cash that you get. So you can make payments if you want. Some people choose to. The vast majority don't choose to make payments on it, because if you don't have to pay the mortgage company, why would you? I think the money's probably better in your pockets than it is in the mortgage company's pockets. So really, we're giving you tax-free cash, and we're allowing you to use that tax-free cash to eliminate the debts that you have, again, without making mortgage payments. You own the house. And so here we touch on whether your kids get the house or not. You own your home. You will continue to own your home. A reverse is just a lien on title, just like any other mortgage out there. You have the control whether you want to live there for the rest of your life, or you want to sell it, or you want to pay back any amount of it anytime. Your house will go to your kids, maybe not your kids. Maybe you don't want it to go to your kids. Maybe you don't have kids. It'll go to whoever you want it to go to in the end. And in the end, whatever's owed on the reverse will get paid back, whether your kids want to refinance it, whether you have life insurance to pass down to your kids to pay it off, or more likely they're going to sell it because they don't want the house. It just depends on the situation. But if they sell it, whatever's owed gets paid back through the sale, and they get the rest. Excuse me. All reverses are what's called non-recourse. That's a vocabulary term where basically you can't owe more than the house is worth, or more accurately, if you owe more than the house is worth, if the economy crashes, let's say like it did in 2008, nobody can tell you to leave. You still own the house, and when you pass away, the bank, the lender, can't come out after you for anything more that you owe. So if you owe $20,000 more than it's worth, I'm just making that up, then nobody can come after you and say, hey, I want that $20,000. The bank, and if it's a regular HECM government reverse mortgage, the FHA, they are the ones who lose in the deal, not you and not your kids. All right, hope that makes sense. So again, we give you part of your home's value in tax-free cash depending on your age. Obviously, if you're older, you get more, and if you're younger, you get less. So why should we use reverse mortgages to pay off debt? By the way, does this make sense so far? I think it probably does. This is one of the more obvious videos that I've done. Well, if you have debt that's costing you a pretty high monthly payment, month after month after month, and you're uncomfortable with it and you're on fixed income or you're about to be on fixed income, then paying that debt off with another debt, because that's, again, a reverse mortgage is a debt, it's a loan. So with a loan where instead of making the payments, you don't have to make payments, man, that cash flow is just, you're going to feel it. You will absolutely feel the strain lift off of your shoulders. So yes, reverse mortgages are terrific for seniors who want to live in their home for the rest of their lives, but are tight. They're very tight on cash flow, and reasons inflation is up, credit card rates are so high, they're through the roof. And having a financial shortfall, that just means that you're either eating cat food, which I don't really recommend, or I should have done a picture of somebody eating cat food to bring the point across, but I think you get it. So you're either really scrimping, you're missing payments, which is destroying your credit, or you're taking out of another asset like your 401k or your investments, and you're probably taking too much out, and thus the investments might not last for the rest of your life. Okay. So onwards and upwards. I think you get that. Again, this is a very obvious video. There's nothing groundbreaking or earth-shattering about it. It's just how can we, again, showing you how we use your home equity through a reverse mortgage to get rid of this stuff. So look at this. This is what, from CBS News from April. Retail credit card interest. So retail is a little bit different than regular credit cards, but retail is up to 28.93%. Well, that was as of last year in 2023. Has it cooled off a little bit this year? Maybe it's down to 26 from 28. Oh, thank God, my interest is only 26. That's just ridiculous. These rates are so high. All right, you get it. So now, how can the reverse mortgage help? We've gone into the problem enough. I think you understand the problem. Let's figure out how we're helping folks and how I'd love to help you. So let's talk about Patrice first off. I told you 2 stories, no more, but I want to share Patrice with you because she's wonderful and she needs some help. So Patrice has a mortgage of $230. She actually had a mortgage of $230 because we paid it off with the reverse, obviously. But she also, what hurt her more than the mortgage payment, or equally, I guess you could say, is the $73,000 in credit cards that she had that had an average interest rate of 22%. So if you look at what her minimum payment was, $2,068 a month. And if Patrice would just go, and this shocked me. I had to enter this into a calculator because she told me, she said, Jason, if I just pay the bare minimum as I'm doing because I can't do any more, it's going to take me over 500 months to pay it off. I said, baloney, Patrice, you're crazy. And I went in and I forget what website I went to, but if you just, if you Google credit card interest payment calculator or something along those lines, and you Google these numbers, you will see that it will take, at Patrice's rate, it was going to take over 500 months to pay off. How many years is that if you don't have a calculator in front of you? 120 is 10 years, right? 120 months is 10 years. So 10 years, 20 years, 30 years, over 40 years. That means Patrice would be almost 110 before the thing got paid off. It's crazy. It just doesn't. With these credit cards, you're just set up to lose, and it's disgusting. So her monthly payment, you saw what it is. Her mortgage payment, a little bit more reasonable, basically the same, $1902. That was principal and interest. But her fixed income was only $3,200. So her shortfall, just with the credit cards and her mortgage payment, forget the rest of this stuff. Her utilities, her grocery bill, her gas, her Medicare supplement. We're just ignoring that. I'm just saying from the credit card and the mortgage payment, her shortfall was over $700 a month. Just unbearable. She felt the world on her shoulders. So fast forward a little bit over a month, because normally these take between about 30 and 45 days to do. We were able to use the reverse to pay off her $230,000 mortgage. So right there, $1,900 payments wiped out. Then we gave Patrice enough cash to pay off that $73,000 in credit cards. Now, she paid it off herself. We didn't pay off with the reverse. Normally, we give you the cash to pay it off. In some circumstances, if it's a proprietary reverse, we pay it off for you instead, but that's kind of a in the weeds thing. And either way, she used that money to pay off her credit cards. So there you go, $3,900 a month. Patrice is now okay. That 22% interest, that 500 months of payments of $2,000, it's gone forever. How do you think she feels? That was a good picture I picked up, by the way. Look at that. That is that finally the hands of God, okay, I'm being dramatic, but she felt the weight lift off of her shoulders. Patrice absolutely did. And again, just like everybody I help, I'm blessed to have helped them. I'm blessed to have earned her trust. And I'm just so glad that she took this upon herself, because her retirement and her life has absolutely changed just by this little tool. So that's Patrice's story. Let me know what you think. Write a comment below if you'd like, if you don't mind, and let me know what you think about Patrice and what she did. All right, let's talk about Dave and Judy's freedom. Did they get the reverse mortgage? Of course they did. I'm writing freedom in the title. They're in their 70s. And Dave and Judy, they've got over $112,000 in credit cards. And their interest rate, oh, I can't spell interest. Look at that. Their average interest rate, geez, it's slightly lower, just lower, 18%. Whew, that's easy for them, right? They don't need a reverse mortgage. Just keep paying 18%. Their credit card payment for that 112 was $2,800 a month. And by the way, getting specific on how long it takes to pay it off, 582 months to pay it off if they just paid the minimum. You can't do that. It doesn't make sense. Now, the mortgage that they had a sort of a different situation than Patrice, though, because the mortgage that they had on their house is only 2.75%. They're making pretty decent money in retirement, so they weren't stressing the mortgage payment, but they were stressed. I mean, $112,000 in credit cards, $2,800 a month forever for the rest of their lives. That really that was weighing on them. They were disgusted by it. So they reached out to me to see, hey, can I get rid of my credit cards, but can I kind of isolate it? I don't have any problem with my 2.75% mortgage. I don't want to get rid of it. I'm cool paying it off, but I just want to get rid of the credit cards. That's it. So what we did was we gave them what's called a second reverse mortgage. Now, you might not have heard about these second reverse mortgages because us reverse mortgage brokers, really, there's only one lender. As of today, there's only one lender that does them, and they're lower loan sizes, and they don't make enough money for the mortgage companies. But for folks like Dave and Judy, these things are an absolute godsend. It leaves the unnecessary stuff alone, and it allows us to go in surgically and just fix what's wrong. Just fix what they need to be fixed. And if they're good with their mortgage payment, they're good with their mortgage payment. So with the second, we gave them enough cash, and they paid off the 112 that they owed, saved them $2,800 a month. The interest rate of 18% is gone. Oh, yeah, this is not as important, but because of their equity position, they were able to get another $76,000, and they're using some of it to remodel their house because they're going to live in the house for the rest of their lives. So they wanted to say, hey, you know what? I got 76, and now I'm going to make their house is nice already, but they're able to make their house into exactly what they want their house to be. So they're happy, extremely happy living there for the rest of their lives. So that's the second reverse mortgage right there. Basically, we're going to leave your first mortgage alone and just pay off what you need. Just pay off those credit cards. Just pay off those auto bills. just give you money to help the grandkids, just help you fund your business. But the first mortgage with the low rate is left alone. So that's the second reverse mortgage. So now I kind of teased that. There are three types of reverse mortgages that can help. We just went over the second reverse, so we'll tackle that first real quick. It's proprietary, so it's not a government one. Will allow you to keep your low interest first while getting a lump sum second. We can use the second reverse mortgage to pay off your debt if you want to. Otherwise, we'll just give you the cash and you'll pay off the debt. If your credit score is high, and by high I mean just 720 or higher, then we don't even really look at income. So that's the second. It's very easy to do. Sometimes if you have secondary properties, there's a couple of situations where it gets a little bit trickier, but these are all closed within about 30 days. So that's the second reverse. And again, that's if your interest rate's low and you just want to pay off debt without touching your first mortgage. Next, the HECM. That's the FHA reverse. That's the one that mostly everybody talks about. It's been around forever. It's very flexible. It does not allow you to pay off debt through the HECM. It will just give you the money to pay the debt down. The only downside to the HECM, well, a couple. The maximum home value for the HECM right now is about 1.15 million. So if you have a $3 million house and you want to get more cash out of it, you're probably not going to do the HECM. You'll do a proprietary. I've got somebody right now down in South Florida whose house is worth a decent amount. Same in California. House is worth way more than the 1.15. They want as much as they can get out of it. That's not a HECM. That's a proprietary. But the HECM is good if you're looking for a line of credit, if you're looking for income out of it. Limitations with the HECM is they're only going to give you about 60% of the total amount that you can get right away. So we just have to look at, when we look at the HECM versus the proprietary, we have to look at what your goals are, what you need it for. And then that's a conversation that we'll have. I'll ask you probably 7,468 questions, and we'll figure out what the smartest solution is for you. Jumping to the proprietary real quick, it is what it is. It's non-government, it's not FHA, but it's still non-recourse. And I should say that the second reverse mortgage is non-recourse as well. We're just going to give you the money all up front. We're going to give you the lump sum. You're going to use it to pay off your cards, pay off your bills, stick it in your bank account, and make life easier. If your credit score is high, a little higher than 720, we won't look at income as well. And here's something that's neat. I have one proprietary investor where condos qualify very, very, very easy, like within days, as opposed to HECMs, where if your condo isn't on the FHA's approved list, then you have to petition the FHA for a spot approval, and it almost never goes right, and you waste about a month, and you are very frustrated. So if you have a condo that isn't qualified for FHA, then use a proprietary. Call me up, and I'll get you set up with the best lender to do that. All right, let's talk about some questions that we're going to ask on our call, so you are prepared if you call me to ask, hey, can I qualify for this? Can I do this? Which way should I go? Which investor should we choose? Real basic stuff: age, home value, how much you owe on the house if you owe anything, what your interest rate is on your mortgage, what your payment is, all of your bills, your balance, right? How much you owe, what the interest rate is, what your payment is. We'll calculate out at the minimum payment or whatever you're paying, how much longer it's going to take to pay these things off. And yes, that's going to be a frustrating part of our call, because you're going to realize kind of what you're up against. Do you need additional funds besides paying off the debt? Biggest question I have, that's why I have it in red so dramatically. What must this loan do to drastically improve your life? How do we make it better? And then from that answer and the data that you've given me, then we'll pick the right program that's going to do the best that it possibly can for you. And of course, we do look at income, we do look at credit, we'll look at see if you have any late payments. And then we're really, as frustrating as talking about your bills are, I'll go to the well. We'll look at, but I won't keep you on the phone when we do this, but we'll look at your home value, we'll look at the solutions, and then we'll get back on a call and we'll go over exactly how this will help. Go over the rates, we'll go over the fees, we'll go over the process. Normally it takes about 30 to 45 days to do this, so it doesn't, not too long. And then if you want to move forward, then I'll do my very, very best for you. But really, and this is this is my summary, by using your home equity to pay off your high interest bills, this is our goal, right? This is your goal. Turn retirement into your golden years. That's what they say it is. It's not, you're not supposed to scrimp by. You're supposed to live life the way you want to live it. And that's, again, that's my goal. And if you can qualify, not, I should say, not everybody will qualify for this, but if you can qualify for a reverse, then we'll make sure that you're in the absolute best situation, and I'll do my very best for you. Again, here's some more testimonials from clients, Realtor Dana in there. Yeah, if you want to push pause and read these through, you certainly can. And that's me. This is my contact information. My name is Jason Eichmiller. You can get me on it directly. I even put my cell phone number there, so if you need me, you can reach me on the cell. Email jason@homelending.com. Go to www.reversequotes.com, and I'm back. You can see my contact information is on the screen below. But this is the deal. If your debts are hurting you, if the interest is hurting you, if you look up your credit card interest rate and you realize if you're paying 1%, or you've got over 500 months to go, and you don't want that to be a life sentence, then this reverse will, and I'm telling you this just not just by concept, but by experience, by the folks that I've worked with, that I've helped, that I now call friends. It will absolutely do a world of change for you. This is going to make a difference. And I'm just blessed to be able to sit here and help folks who need help. So if you need me, feel free to reach out. My name is Jason Eichmiller. Catch me at 888-309-9705, jason@keyhomelending.com, or you can go to www.reversequotes.com. Whichever way you want to contact me. If you ask me for help, I will do my absolute best for you. All right. Thank you so much for your attention. Just like all these videos, this one ran long. They all do. I get to yapping, but it's just because I'm so excited for my clients who have taken the journey, and for you, if you're in a bad spot, then again, I'll do my best to help. And I know you're going to feel that weight lift off of your shoulders, just like my other clients have. All right. Thank you so much, and have a great day. Talk soon.